Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Tuesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and this chart right here, in this candle today, a lot of the interpretation of this candle depends upon your point of view. If you are a bear, you say, well, we have gone through the upper band, and it's a topping candle and the highs are being rejected. So we're going to reverse and head right back down finally. Okay. If you're a bull, you look at that and you say, well, we keep making higher lows and we're just going to continue on business as usual. Okay. Somebody's going to be wrong, somebody's going to be right. Same thing that happens every day. But I would caution everyone that we are in day 3 of a band ride. Okay, that's just, look, that's just price on a chart. 1, 2, 3. Okay, and so there will be a fourth day. What the bulls need to do today is defend yesterday's low. That's down at 21.12 $. Yesterday was a very classic trend day higher. There really was no give back. The opening print in the regular session was at 21.17. That number, that level was tested at about 10 by 10:15 in the morning, and that was it. It was your very classic grind up day for the bulls yesterday. If this is a band ride, this pullback is where you would expect it to be. Upper band rides during the course of this macro uptrend have been morning dips that have been there to buy. We did it in the room for over a year. This is what you do. You come in, you buy the morning dip, and you grind higher. The bears have to avoid that. The best way the bears can avoid that is the bounce off of this dip needs to be a lower high for sure versus 21.34. Ideally versus 21.32, 21.31.5, which is where we kind of based during the course of the very early morning hours after Europe popped it off of the open. We got a pullback from the high into 8:30 numbers was 21.32. So the bounce off of this push lower needs to be lower than 21.32. The bears then need to make a lower low versus this low. And whether this low is already in it at 27.5 is unclear. The bears can then build upon that and try to get back down to the 21.12 area. And ideally, if you're a bear, you want to break that. If you're a bull, you want this dip. Okay? You want to come in. You want to buy it, you want to get above 32, you want to get above 34, and you want to run them out of town again. The bandwidth is at 2.67. That is tight enough, and you can see it starting to lift away here from the flat line. So we're starting to get expansion. If this is a true band ride, we are just getting started. So I would caution my legions of swing shorters out there, and I'm sure there are a lot of you today. Control your size, control your risk, because if this is a true band ride, you're going to get very underwater very fast. And you don't want to be on the other end of that. So enjoy this dip, play it with caution, use it as an opportunity to take some profits, use it as an opportunity to get your risk out. Okay, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. Come trade this stuff with us. Don't trade this stuff by yourself. We would love to meet you and see if we can help you with your trading. I'll be back tomorrow morning with another webcast. Trade them well, everybody.